Good afternoon, everyone. A warm welcome to all of you. My name is Mirchandani. I'm delighted to be your host for today's webinar, which is IndiaBonds Investor Education Initiative. We at IndiaBonds is on a quest to make the bond industry more accessible and transparent in India. And one of the ways to do that is by conducting webinars, as well as some corporate webinars and educational webinars, wherein we simplify the bond market and also engage with some of the most distinguished leaders in the industry. Today, we have four senior management people from 360 ONE Prime Ltd, a wholly owned subsidiary of 360 ONE Wealth, earlier known as IIFL Wealth. The company is a lending vehicle of 360 ONE Group. Now, without any further delay, let me take the privilege to introduce you to our esteemed guest. Our first guest is Mr. Himanshu Jain, who is the CEO and whole-time director with 360 ONE Group. Good afternoon, sir. Mr. Himanshu Jain heads the lending solution and business and focuses on growing the existing NBFC business of the 360 Group. He has over 2 decades of work experience and specializes in capital markets, wealth management, and lending businesses. Himanshu earned his master's in financial control from Institute of Finance and Management. He has earlier been associated with Morgan Stanley, DSP Merrill Lynch, Citibank, and BNP Paribas. Along with him, we have Mr. Sanjay Wadhwa, who is the CFO and has over 25 years of experience specializing in the financial services. He has been associated with financial services on the wealth management side, asset management, NBFCs, insurance broking, and commodity exchange, and many other such financial institutes. He has been associated previously with L&T Financial Services, MCX, Reliance Money, Reliance Mutual Fund, HSBC, and Ernst & Young. Good afternoon, Mr. Wadhwa.
Hi, good afternoon.
Along with him, we have Mr. Niraj Murarka, who is the CIO, which is the Chief Investment Officer. He is responsible for the credit function of the company. He has over 2 decades of experience in structured finance, corporate finance, project finance, M&A, as well as credit risk underwriting. He's been previously associated with stalwart companies like HCL Technologies. He's a chartered accountant, rank holder chartered accountant, a company secretary, and MBA in finance from Faculty of Management Studies, Delhi University. Good afternoon, sir. Welcome. Along with him, we have our last guest, who is Ms. Charu Kalita. She heads the Treasury and Fixed Income Trading function at 360. Ms. Charu has over 16 years of experience end-to-end in financial capital management and treasury management with some of the largest housing finance companies and corporates. She's worked on both sides, assets as well as liability management. She's an expert in the treasury management, fixed income, and strategic planning, as well as cash management. She's earlier been associated with brands like L&T Limited, Wipro Limited, wherein she's managed an investment forex book of over 3 billion and close to 4 billions of investment book. She's an MBA in finance and IT from XLRI Jamshedpur. Hi, good afternoon, Charu. Welcome.
Good afternoon.
So without any further delay, I would like to start the presentation. I'd like to hand over the mic.
Thank you so much. Am I audible?
Yes, sir, very much.
Okay. So thank you so much for such a generous introduction. And I'm sure you have your client base as well. So good afternoon, everyone, and wishing all of you a very strong start to the new year as well. And it's great to have all of you today. Wish we could have met in person as well. But again, since last 3-4 years, we have seen how the world evolves. And definitely it works quite well and seamlessly. So idea today is to talk about our maiden offering, public issue of NCDs. And within this context, it will have 2 parts. One is introduction about 361. We will touch upon an NBFC, and we will also talk about the offering as well. And in case if any of you have any questions as well, that we can always take it at the back end. So that's going to be the format. Is it okay?
Yes, absolutely correct, sir. We already have a lot of queries while registering. A lot of people have asked queries. As we move towards the end of the presentation, during the Q&A section, we'll try to ask those queries. There's a lot of people who have already joined in also in the webinar. Anybody who wants to please ask questions, please feel free to post it in the Q&A section so that the management can address the same.
Thank you so much. I think that's a very structured way of going up around it. And rest assured, every single query will be taken up and will be appropriately answered as well. So quick about us on 360 ONE Prime, which is an NBFC vehicle of 360 ONE Wealth Management, which is a listed entity on BSE and NSE. And it's been in existence now over 15 years, started in 2008 by 2 gentlemen, Karan Bhagat and Yatin Shah. And quick story in last 15 years, starting from zero to about, as we speak, is about 4 lakh crore plus of AUM with us, with about 10,000 active clients. We do business across 23 locations where we have a direct presence, and 5 in international markets. And across, we cover almost about 50 odd centers. In terms of 361 Wealth Management, we have various licenses to support wealth management requirement of our HNI clients, which starts from advisory, broking, depository, asset management, trusteeship, AMC, and last one was the NBFC license, which was acquired in 2015. And since we've been in business, so this is our 8th year of business of 361 Prime. Just about the wealth management outfit got listed about 3 years back. Today, as we speak, we do a PAT of about 650 odd crores. We have almost 70% of the overall paid up capital is been with all the institutions, FIs and FIs put together. Bain holds little above 24 odd percent, followed by Capital, HSBC, iPru, and there is a long list of institutions, those who hold about 1 odd percent. Abacus is again another investor. So that's about us. Market cap, again, whatever give and take, about 22,000 crore plus. And that's where our story is from a wealth management point of view. If we move to the next slide, thanks for that. This is all about 361 Prime, which is the NBFC vehicle. Just about some quick data points. The most important is the capital adequacy ratio that talks about the solvency, that talks about that, yes, how well capitalized entity is. All this while, barring 1 year, we've always been about 20% plus, whereas the statutory requirement is about 15 odd percent. And for 30th September 23, we've been about marginally about 24%. The net worth stands at about 1,450 odd crores. That is basis again 30th September 23 data points. And that results into a loan book of about 4,800 crores. We've been in the range of about 4,500 to about 5,000 odd crores, but this is end of the period data points. So that's what the reflection is all about. In terms of the overall business, we will talk about our product line in subsequent slide, but this is a very simple business. What we do is basically security-based lending. So whatever wealth management portfolio that we advise to our set of clients, or whatever direct stocks, listed stocks, mutual fund, managed funds, alternatives, high quality of debt, whatever we position to our set of clients or any prospect against which if anybody is looking for any funding facility, 361 Prime comes forward and offer a funding facility. So that's one side of business. Second, another business vertical is loans against property. That's largely a hybrid portfolio. So clients at times have wealth management or whatever I've just spoken about, and also real estate they bring in to have relatively higher drawing power. So that's what we do on the loan against property. And the third part is, of course, our unsecured loan. And unsecured loan also, we have been very, very prudent in terms of the facility as well. We look at client standing, we look at relationship angle, we look at about their past conduct as well. So we will take this through in subsequent slide as well. Now, this all put together helped us today, in terms of getting some of the key data points, which is PAT, where we do about 170 odd crores, which is 30th September. But if you look at in the past year as well, we've always posted about 250 odd crores of PAT. So that's been our story. In terms of liability, which is a very, very important element, and to me is a heart and soul, in addition to the asset book, we've been quite diversified. So we have raised money through equity linked notes, which is we call it ELNs. We have a large portion again coming from bank lines and commercial paper. The breakup will be shared in subsequent slides as well. So largely we've been fairly diversified to take care of our needs. So when we have a balance sheet of about 7,000 odd crores, because there is an investment book as well. So that then, other than the net worth, these are three components which takes care so far. An idea with this offering is to further diversify, to further add more clients as well, is we are coming up with this offering of public issue of NCDs, That we will talk at the fag end of the presentation. Now, All In has helped us in terms of getting our rating as well. So we maintain our rating by CRISIL and ICRA and Fitch as well, as AA with a positive outlook and stable. So that's been the journey. And it's been, if we look at the next slide as well, if we can just move there as well, it's all talks about the product offering, what we do, which I have just touched upon. So on loan against securities, we take, as I said, the wealth management portfolio. We talk about direct stocks. We talk about mutual funds, alternatives. We talk about high graded debentures. So that's been the underlying collateral. Just to give you an idea, we have a cover of almost 3x. So which means if any client, if we look at a book level of about say 4,000 crores against loans against security, the resultant overall coverage in terms of underlying security is about 12,000 odd crores. Just a ballpark number, which I am sharing with you. How exactly it works? So client posts collaterals, whether whatever 4, 5, 6 categories, what I have just spoken about, and we layer mark those securities in our favor, and a line is established, a loan amount is established, and basis which client can always draw. And in case of any surplus liquidity which they are running, they can always pay us off. So it's a very straight through process. That's how we do a perfection of security. And that's how a facility is being run. How exactly the underwriting of any loan which is being done, we will talk about in subsequent slide as well. In terms of loans against property, is relatively a new product for us, which because we've been in existence for about 8 years. But we've been kind of increasing our concentration as well. And what we were in terms of overall pool today, as we speak, we are at a reasonable size on loan against property as well, overall portfolio. It's not the standalone loan against property, but also these are hybrid portfolio where client is posting some financial assets and real estate as well. So it's a combination portfolio against which we lend resources. In terms of real estate selection, I've kind of initiated my conversation with, we've been very, very prudent. Idea is we only get into tier 1 cities, top metros, and that to grade A property. So just to further clarify to everybody, because the real estate means lots of query, they come to, somebody is talking about land in outskirts or agri land, etc. That's not our standard offering to any of the clients. So idea is something which we all can relate in terms of high quality of assets. That's what being considered. In terms of unsecured loan, again, these are large wealth relationship to which some of these facilities is being offered. Basis relationship angle, basis the strength of the balance sheet, basis in terms of their past conduct as well. And that's the reason is being, even after all the combination, which is unsecured, LAP and LAS, today we have 0 NPAs. And that's been the history of this business of last 8 years. We don't have a single loan which has turned bad. That's one. We don't, as we speak, we don't have a single litigation from any client. So these two things are an outcome of a sound, prudent practice, which has been observed and being implemented. And the resultant output is some of these highlights, which I've just kind of shared with you. If you can move to the next slide, please.
Sure.
This is about our overall how we stack up within the organization. So, we draw a lot of comfort, and we been honestly from a 361 prime point of view. The wealth business is a big plus for us, because within wealth, as I said, we have these large clients base. That's one. Second is we have bankers of about, I think, 225 odd bankers, those who do pan-India coverage. And these are a set of people, those who initiate relationships, and they do introduction to the wealth platform, they do introduction to the NBFC, and NBFC takes over those relationships. Also, NBFC has its own sales team. They also initiate transactions basis some of those past connects or some of those references which keep flowing in as well. So in total, the overall wealth business is a huge plus, and that's put us in a very, very advantageous and a distinct position, because the flow of business is always strong. There is always a very strong pipe of business at any given point of time, which is worthy consideration. And that's why we have never been short as regards to overall business part is concerned. So the overall brand and the parent, I think that's something which is very unique to us, and that helps in terms of building up so far a sound business. In terms of quality, we have already spoken about that. We haven't faced any challenging situation in terms of any defaults as well. I think there is fair bit of work which gets into the background in terms of portfolio balancing, in terms of collateral management, in terms of doing stress testing of the underlying collateral as well. And I think that helps us in terms of passing through all the volatility. We have seen the volatility of lockdown, which was fairly steep. In the past also, there were 2-3 such incidents where we had a patch of about few weeks as well, where markets been on the south side. Still, we managed to manage this situation well and haven't taken any hit, both principal and interest put together. In terms of the management team, I think we take pride in terms of talking about the core team is intact from day one. So there is no attrition in the team as well. So Niraj and I started this business together 2015. We've been almost day one employee for 360 ONE Prime, and from zero to whatever the loan book or in terms of liability, that's all been built from scratch. I have my worthy colleagues, Sanjay and Charu, those who have joined over a period of time. They've strengthened the overall management team as well. And this is how the overall combination have helped us in terms of not only managing our book during the crisis of Island FS, what we had seen in 2017, 18, and also during lockdown, which was there was a steep fall in the market. And there was definitely challenging times for us, but the parentage and the strong management team helped us in terms of sailing this tough phase as well. Healthy capitalization. Again, we have already spoken about CAR at about 24% with the balance with the net worth of about 1450 crores. I think that put us in a very, very strong position. There is ample room for us to grow because the regulatory wise is about 15%. We can easily add at the present capitalization of another 1,500 odd crores. And that's enough firepower for us to move forward as well. In terms of technology, we take a lot of pride in terms of talking about that the entire loan management system has been all homegrown. It's not an off-the-shelf technology that what we acquired. And that's all been built over a period of time. And it's fully integrated with our depository system and with the wealth system as well. It not only posts collateral, it not only does KYC of any particular kind, but also it talks about in terms of the interest, in terms of swap of securities in case somebody wants to rebalance a portfolio, and also all kind of alerts in terms of repayments, etc. That's all been captured in the system. And I can assure you, any off-the-shelf solutions which are there, we know about most of those off-the-shelf solutions in terms of technology part. But what we built is extremely robust, extremely scalable, and for sure we can add enough and more clients on the same platform without doing any work as well. In terms of the overall risk management practices, I think that's to us is more important because in case if we have to maintain the same track record of NPS, I think idea is the risk management is core. And we do, in fact, the entire management team is involved day in, day out. Every single margin call is being tracked at our end. And we have this technology solution which gave us almost live updates of the underlying collateral. So any market movement in particular happening, we will get to know with a lead time of maybe a few minutes in terms of how exactly it has impacted any client portfolio, and whether the client has resulted into a margin call. We can spot it much ahead of anybody else for that matter. So that's key, are some of the strength areas. And honestly, I mean, between the management team, we take extreme pride in some saying that we are ancillary to 360 ONE, which is the wealth management outfit. I think the kind of strength which the overall outfit brings, I think we've been a resultant beneficiary about it. And to me, I think it's a very, very important and very big differentiator about us over rest. Charu, if you can, next slide, please. Sorry.
They are changing the slide.
Okay, if you can just move to the next slide, please. Yeah. Okay, this is a brief snapshot in terms of our numbers. This is just a scorecard. We have already spoken about AUM. We are about between 4,500 to about 5,000 odd crores. These are end of period numbers that what you see, and at times there could be spike in some of the numbers, and spike is in resultant because there are few last minute cases which at times they come for booking. Otherwise, averages are almost been in line to whatever has been stated. So that's the reason in last 1 year we've been managing between 4.5 to about 5,000 odd crores. That's been on a steady state, and past data anyway has been reflective about it. In terms of the net worth, if you look at in terms of whatever profits that we make, it's partially retained in the balance sheet, partially which is being paid out. Basis there is now a clear guidance from central bank. We follow and we observe completely, and that's how this the net worth results into, as on 30th September, it's resulted into about 1450 odd crores. Capital adequacy has been widely, as I've already kind of touched upon, we've always been about 20 odd percent, barring 23, because in this particular year, we've been very aggressive in terms of adding assets. And that's the reason the CAR bit dropped, because suddenly the balance sheet sides increase substantially, and resultant benefits thereout. If you see, the yields have also shot up considerably, and which has resulted in the increase in profitability as well. So if you look at overall yields, we are not the players, those who operate into high teens category, that more often that one come across, and when you talk about NBFC loan, and that demonstrate that we are there for strong clients, for underlying strong collateral. And I think one of the data points which we kind of being repetitive about it is about the net NPA, which is 0. And I think it demonstrates that we are not into something which is largely a risky category, or potentially where you are taking inordinate risk as well. So we've been very prudent, we've been very measured, and that's where we are. In terms of borrowing costs, I think it's all about a combination of everything. We have already spoken about a healthy mix through equity-linked notes, through commercial papers, through bank lines, and that's how it's been about. The idea of, again, this offering is more in terms of raising resources and further diversifying overall liability piece, and I think it's going to also help us in terms of raising long-term resources as well. And subsequently, if you look at the overall graph, which has fallen in the last 3 years in terms of borrowing costs, but now considering the market dynamics and the circumstances that we are in middle of, where we have seen hardening of interest rate by central bank almost 200 basis points, I think resultant impact would be seen in this coming quarter as well, where we are going to where we will have our liabilities will also get repriced, and accordingly the borrowing cost as well. The PAT, we've been fairly strong thereout. We've been in the region of about 250 odd crores plus. If you look at the spike into 2022, the reason is only where we have done mark-to-market valuation of some of the investments, and that has resulted into this kicker in terms of PAT. So this is broadly our scorecard in terms of the numbers that we have put up in the past as well. This is broadly the loan book composition. We have already touched upon that we have a small component of unsecured loan, which is about 11 odd percent. Balance is 88-89% is all about secured loan. In terms of coverage bit, I will kind of shared with you that on the loan against security standalone part, we have almost 3x of cover. And in terms wherever the property or a hybrid portfolio are coming in, we have a coverage of about 2.5x. And again, on loan against securities, especially the entire portfolio, wherever we are getting daily price or daily NAVs that's being updated on daily basis, wherever some of the NAVs which are getting on periodic basis, as and when they come out, they get updated as well. We've been distinct on the real estate side. Unlike all the institutions, we revalue our entire underlying real estate collateral on yearly basis, irrespective of size or everything. It's been a fresh valuation we carry out. The idea is that any plus or minus that needs to get reflected, and we should be in line with whatever the circumstances or whatever the underlying tone is all about. Next slide, please. This is liability profile, and again, if you look at, and most of the institutions have gone through a big change post IL&FS crisis. I think the dependency earlier was largely around commercial papers, and which idea was to open for more lines, more I would say options in terms of raising liabilities as well. We have, as I said, a very strong wealth management franchise through which we have raised market-linked debentures or ELNs. That's how we've been. So there is a significant shift if we see, and the corresponding dependence on overall commercial papers have been on the south side. And bank lines got kicked in about last year. And we've been fortunate enough that top banks like State Bank of India, HDFC, and ICICI, along with Karnataka Bank, they have offered funding facility. Idea is banks have restricted reasons because they can't do capital market as an underlying collateral. So any lab portfolio that what we have built, we got a refi there out, and that's the reason there is enough traction there out. And as and when we build loan against portfolio, as we are sure that we will get more lines as well. In terms of for the commercial papers, very strong backing from about 9 to 10 AMCs led by iPro, Axis, Tata, and UTI, including Nippon. They've been extremely helpful, extremely forthcoming in terms of as and when we have any requirements. They've been very, very supportive since the start of this business as well. So whatever we were, there are two facets. One, in terms of the liability providers. So this is now the fourth, I would say, dimension that what we are initiating in terms of raising money through NCD offering. This could be the fourth. The ELN, the equity linked notes, that's one. Bank lines, two. Commercial paper, three. And this is the fourth one that we are talking about. Also, it also talks about the various buckets which opens up in terms of our liability profile. And just to touch upon that, on the subsequent slide, that we've been running a positive ALM. If you can just move to the next slide, please. Yeah, so the liability profile helps us in terms of having a positive ALM and across all buckets. And I think this is something which we take a lot of pride, and there's a lot of work which has gone into, because please understand, these are all loans where clients have flexibility to pay us, because there is hardly any loans where we have a definitive lock-in there out. And within that context, managing a ALM, I think there is a fair bit of work which has gone into it. And I think all the buckets being on the positive side, I think that has helped us in terms of navigating any challenging phase as well. Next slide, please. In terms of risk management practices, again, this business is all about where you have to be alert 24/7. Any movement in equity markets where the underlying, when we know about 85% of the book is towards where you have wealth management portfolios as well, you have to be extremely circumspect, extremely cautious and careful there about. So we have, as I said, systems, those who run underlying portfolio on real-time basis, as good as real-time basis, where push of a button and we know where exactly are the client positions there as well. So that helps us. We also do stress testing. In terms of client boarding, we've been, as I said, from CIBIL check to there is enough data which is there in social media we capture as well. There is enough information which is there in terms of a defaulter list as well. So we look through about all of those things. There is a OFAC check, which is all about defaulters, those being there, those who've been outside India. There is a list that also been captured. So idea is not only in terms of managing portfolios which have been built as an underlying, but also the new onboarding. We've been extremely thoughtful in terms of clients coming on board. In terms of market risk, it's all about the risk which is there within the environment, be it interest rate risk, which are about people risk, technology risk, be it in terms of third-party risk. So we've been we have a full-time CRO, well-experienced guy who works with the board directly on quarterly basis. There is RMC which has been in place. He directly reports into board, and where he talks about that every single risk which is being envisaged in the overall business, that is being tracked, and how exactly that risk is being navigated. In terms of liquidity risk management, I think that is well demonstrated by the actions in the past. which I've kind of touched upon, not only in terms of a very, very high, healthy liability mix, but also running a positive ALM and carrying, excuse me, carrying sufficient cash at any given point of time. I think that's the overall statement about our business. Just to give you one of the data points, even in the burst of market circumstances, just around lockdown, 361 Prime was always in the business. We disbursed loans and we were always carrying some liquidity with us. So there has never been any given, even a day's delay in terms of fulfilling any counterparty obligation. So that we take a lot of pride along with our zero NPA track record. If we can move to the next slide, please. This is in terms of overall strategy and how exactly we look at our business. Just to give you a data point, I've kind of set the tone in the beginning itself. We've been a subset of 361, which is the largest and the leading wealth management outfit. And there we draw a lot of strength from there, not only in terms of access, not only in terms of clients, but also if we look at overall AUM, which is about 4 lakh crores, our loan book size is hardly anything from that point of view. If you look at global benchmarks, starting from possibly UBS to Citi, Merrill, Morgan, BNP, Barclays, Deutsche, JB, any of these large institutions, if you look at globally, any wealth management, I would say the global players as well, or a private bank outfit, they have almost 8 to 10% of their assets coming through leverage. Whereas in our case, it's just about 1.25%. So that means we have a long way to go. And idea is we will continue to be prudent. We'll continue to be very, very safe and sound when it comes to underwriting or when it comes to onboarding new set of clients. So that prudence will continue. But again, we have a good runway to seize those moments, to capitalize on those opportunities as well. In terms of technology, I've already kind of touched upon. It's all a homegrown loan management system, which is robust enough, which can take care of everything, both from client onboarding to the loan management system to surveillance part. Everything is there, one centralized system. In terms of borrowing ever, we've kind of touched upon that there are mutual funds, there are banks, there are our own clients, those being a liability provider to us. And with this offering, we will increase our family of overall new set of investors who are likely to get associated with us. So it's going to be extremely well, I would say, spread out basket, along with a very good mix of investors as well, both for the short tenor and for long dated one as well. If you can move to the next slide, please. Balance sheet numbers, I'll just turn it to Niraj and Sanjay, if they want to just touch upon these numbers, please.
So balance sheet numbers are there on the screen. We hardly have any investments in the...
Sorry, Niraj, your voice is echoing for the audience. If anybody else who's there in the room, can you switch off your speaker, please?
Yeah.
Yeah, perfect.
So like any other financial institutions, we hardly have any investment in the fixed assets. Most of our assets are either the loan book or the investments, which is very much apparent on the second line item, which is the financial assets. So this line items includes, apart from the loan book, whatever investments which we have on the balance sheet. So largely the investments will be into two buckets. One, which is the liquidity management related investments, and the another as a sponsor of AIF, which is distributed by our wealth management outfit. We invest into the a sponsor class of the AIF. So there we have some investments. So largely this three asset class put together constitutes the financial assets. And on the liabilities side, I mean, most of the liabilities are raised either through the debt securities or from the bank borrowings, apart from the equity. So if we have any questions, we can, I mean, very well take the questions or any clarifications needed on this.
Sure. Niraj, we'll take up. There are a lot of questions that have come up live.
Can we move to the
next slide, please.
We'll take up the queries in the Q&A section. There are a lot of
This
questions.
table gives the idea about our top line, bottom line, PAT number for the last 3 financial year, as well as the during the current financial year for the first half year.
And just to highlight here, FY21 numbers actually include our distribution business also, which is why you will see that the revenue from operations is falling a bit from 970 crores to 750 crores. But that's on account of demerger, not on account of any reduction in business. On the bottom line, you will see that improving significantly year on year. In fact, in the first half of the year, we've already crossed 170 crores, which is way above than the profitability ever that this company has seen. Our return on assets and return on equity both continue to be very, very healthy, with the ROA of 4.9% and an ROE of 23.8%.
Thank you, Sanjay. Okay. Am I audible?
Yes, sir. Very much. We can hear you.
Am I audible?
Yes, very much. We can hear
Thank
you.
you so much. So idea is this is about the management team. So you have already met Niraj, who's on the extreme left, Sanjay, who's on my left, and Charu on the right side. So that's been in terms of we all four, we run on day-to-day basis. But Karan, again, as I said, he's been a mascot and icon of the entire wealth management industry. He started 361, in 2008 as a startup. Yatin, co-founder, and again, Karan and Yatin, they have started it together, and this entire wealth journey, they have built it together. Sanjay has been with us for almost 4 years. He comes with a very, very strong CV value and a huge value add in terms of managing our overall balance sheet operations as well. Niraj wears our credit and investment head, and again from a market wisdom, from a market insights, that's a huge plus for us with his very, very strong academic background as well. Charu has been with us a little over 2 years as well. She has seen again a very, very, I would say, a very dynamic business cycle where NBFCs, they have gone through a fair bit of turbulence. She has navigated that ship in our past assignment as well, and she's been doing a great job with us as well. In terms of board, if we can just quickly see the next slide, it's been a very, very engaging board, unlike other boards what at least I had seen in the past, in my past assignments as well. Dr. Narayan, he was with economic advisor with PMO, with Prime Minister, and also a very, very seasoned bureaucrat, where he has played numerous roles in Ministry of Finance, Ministry of Petroleum and Gas, and very actively involved when it comes to our business part is concerned. Mrs. Rekha Warrior with us for about almost 4 years, had a long stint with Reserve Bank of India, and she was Chief General Manager. And again, on the entire GSEC framework, she worked extensively. And in terms of market surveillance, etc., she comes with a very, very strong CV value as well. She just to upscale her, she did her master's degree in public policy from Princeton, US, which was in 2005. A huge value add from our point of view. Miss Revati, she just recently been inducted as a fresh face. Again, a very, very strong CV value. She was CFO with some of the leading tech companies based out of Bangalore. Karan, we have already spoken about, again, 20-year plus, day one on IFL, from 361 wealth management point of view. He's been a founder. He's been a founder CEO for wealth business, and he's been on the board of 361 Prime. Yatin, we as co-founder, we have already spoken about. Personally, me, last 8 years, I'm being involved from day one. I had past stints with Citi, Merrill, and Morgan, including BNP Paribas. So this is my 25th year with the overall NBFC, capital markets, and wealth management business as well.
Investments in debt securities, municipal debt securities, securitized debt instruments are subject to risks including delay and/or default in payment. Read all the offer related documents carefully.